Welcome to the at-home edition of the Stock Play of the Day. Today's stock is going to be PayPal. We'll discuss, should we pass or should we play? Hello, everyone. My name is Brian Overby. I am the Senior Options Analyst at Ally Invest.
And I'm Lindsay Bell, Chief Investment Strategist at Ally Invest.
All right, Lindsay. Well, here I'm going to bring up a screen of the S&P 500 index. We'll have a chart here. What are your thoughts on the S&P 500 index and what's going on in the markets?
Well, Brian, it's a Monday with a lot of green on the screen here. Matches my shirt, I might add. But yeah, it's a big day, a big up day in the market this morning. There's a couple of news pieces that is really driving the action. Most notably, the White House came out today and they said that they're seeing some stabilization with regards to coronavirus and the developments there. Hospital rates and some of the hot spots are starting to stabilize according to them. We also saw over the weekend that deaths in New York City, which is actually where I'm located, have come down for the first time over the weekend. So the market's cheering that we could be getting to the peak. This week could still be very bad from a contagion perspective, but we might be getting to the other side of this, which is really exciting and getting investors happy to see that we can finally start to see the other side of this thing. We haven't been able to do that for a while, so it's a welcome piece of news, even if it's only showing very early signs here in New York. The other side of the story, though, is Europe is getting incrementally better, both in Italy and Spain. The number of deaths is declining. There's a clear downward trend in cases. So that's a very good sign, too, that we're moving beyond the worst of the virus over there. And then also, I think that out of the energy market, we haven't talked a lot about that, but the oil market has really been crushed over the course of the first quarter as supply has really just flooded the market at the same time that demand is coming off significantly due to the coronavirus situation. We got some positive news initially over the weekend. OPEC was supposed to have an emergency meeting today that got pushed to Thursday. The market didn't initially like that, but then again this morning, we heard from Russia Sovereign Wealth Fund chief, and they said that they are getting to an agreement with Russia and Saudi Arabia. So the market's anticipating that we're going to see a cut in production out of those guys. So you're seeing a jump in oil prices today, though still at very low levels. Now, Brian, I know you have charts over there of the NASDAQ as well as the Russell 2000, and I didn't get to show it on the S&P, but there's a 20-day moving average. We were talking about this before we started the show, and you see there that 20-day moving average, the blue line that Brian is highlighting, this is the NASDAQ. We just saw it too on the S&P 500. You're seeing today the index pop above that 20-day moving average. It's been what seems to be a bit of a level of resistance going into today. So the fact that we're above that is a positive. You're not quite though seeing that on the Russell 2000, which Brian just switched his screen to show here. And so you see the blue line again, that 20-day moving average. The Russell is staying below that line. It still remains a level of resistance for the small cap Russell 2000. These stocks have had a much harder time than the larger cap ones as investors really flock to the higher quality, larger cap names with better balance sheets and better cash flow. These small cap companies are really, they have heavy debt loads. They took advantage of low interest rates over the past 10, 11 years during the bull market. And so that is preventing them from really starting to see a pop just yet, because it is the small businesses that are getting hit the hardest by the coronavirus and the economic impact there. So that's why this index is struggling. If we start to see that the index pop above that 20-day moving average, it will certainly be a welcome sign there. Mm-hmm. But Brian, you and I talk about the VIX Pretty much every week, because it's been so elevated, and it's, there's just been a significant amount of volatility in the market overall. But today we're seeing a sign that the VIX has dipped below 50. What do you make of that?
Yeah, and I just quickly brought up a chart here to kind of highlight this, and I'll zoom out a little bit on it. But that is a good sign. So basically, if you could say it this way, 50 is the new 20 in the VIX, in my mind at least.
I like that. 50 is the new 20, Brian.
It's the most normal volatility that we've seen since the coronavirus. And I'm zooming way out here. I'm going to try to get all the way back to the 2008, and I do have a trend line that's drawn here. And you can see that if we go all the way back, there's only about actually four times where we came up and touched the 50. Now with the coronavirus situation, we actually broke through the 50 and beyond. And I think the fact that it's came back down below the 50, we've seen a breach of the 20-day moving average, which has added a little bit of support. But once again, these are just talking points on their own. They're not significant, but you get more and more talking points, it becomes a little bit more significant. So in this instance, we see that the VIX did make the big run up, and it went above and beyond where we were. Well, it actually came very close to 2008. I think it was almost to the penny as far as a new high since 2008. And then now we're breaking back down. That means we got a little bit more chop in the marketplace. We got the 20-day moving average. We breached through it to the upside. We have the VIX coming down below 40. There's just a little bit more normalcy in the marketplace nowadays, it seems. So now, well, we're getting a little long in the tooth. Let's get into the stock of the day. Today, we're going to talk about PayPal, and I have the chart up here on PayPal. And I'm going to highlight one thing too. That 20-day moving average just seems to be kind of interesting on all of these charts. And PayPal just broke through that today too. And you can see how many touch points that PayPal had on the 20-day moving average, and it just couldn't quite get through it. And now we see the big spike up in PayPal today, and now we're above that level once again. And earnings are coming too. We got to remind you of that. All right.
Yeah, that's right. Earnings are for PayPal are going to come at the end of April. We're really going to get into Q1 earnings season here about mid-April. So they'll be right there in the mix. So that move in the stock is definitely encouraging. And I should mention, Brian, neither of us are technicians. We dabble a little bit, but we're no experts in the technicals of the market, but we do know, some of the basic rules. So that's why we point those types of things out. But for PayPal, this is an interesting company. The stock has been beaten down, but it's still only down about 15% year to date, which is in line with the technology sector, but it's holding up much better than the S&P 500, which is down about 23% on a year to date basis. Now the stock is obviously, it's a payment stock. They bought Venmo several years ago. Venmo has about 40 million users. People have to remember that. And the payment space is being hugely disrupted. We're moving from a cash society to a cashless society, becoming much more digitally and technology oriented. These guys are right at the center of that, with their offering to not only on Venmo, but the help that they give small businesses in operating and collecting payments. They're also huge into the international expansion. That's really where, before everything happened with Corona, people were looking at this as a stock that they could own and benefit from their ability to grow substantially within the international markets. You've got MasterCard and Visa that really own the domestic and some of the developed markets, but these guys were making inroads internationally. We still think that from a fundamental perspective, if not more so now, this is the type of company that's going to benefit after the coronavirus does pass, because we were already transitioning to that cashless society and digital payment trend. And I think that this is going to actually increase the speed to that type of environment. And so PayPal will be one of the companies that absolutely benefits from that. Now, of course, near term is that you're going to see a significant slowdown in spending by consumers and businesses near term, given the shutdown of economies across the world. to combat coronavirus through social distancing. But that being said, we think that there should be a bounce back once we get past this to the other side of things, like the market's looking at today, which is why you see this stock popping pretty significantly. I think it's up about 5% on the day. And so this should be a winner on the other side of this. You look at the valuation of this stock too. You know, Brian, I always talk about, hey, we got to look at the valuation. Let's look at the PE on this thing. Currently, it's trading at 27 times on a forward PE basis. Now, that is a discount to its 3-year average of 33 times and its 5-year average of 30 times. It is out of the 3 average. PayPal has historically, because of its potential for higher growth, garnered a higher multiple over the last 3 years than the other 2 names. But you've got MasterCard that's really trading in line with its historical average, and Visa's got a little bit of a discount. But again, I think that the growth opportunity of PayPal is so much more significant. And they're really going to benefit from the other side. I will note that Brian mentioned that these guys are going to report earnings at the end of April. Well, guess what, Brian? They also already came out with, like some other companies, and they talked about how the coronavirus slowdown is going to impact the current quarter. And they said that there'll be about a percentage point hit to top line or revenue growth for them in the first quarter of the year. They didn't talk about any, second quarter or further. We know, I think most investors, like you and I have talked about, most investors with any stock really are looking past not only the first quarter, but second quarter. We don't think guidance is going to be good from any company for the second quarter. And really investors are looking beyond that. And that's what you have to do with a name like PayPal is, these guys are going to survive. They have a strong balance sheet, by the way, too. There was, uncertainty about with the slowdown in revenue growth and, the uncertainty about the economic environment. They do serve small businesses. So like you said, they're going to, take a hit to revenue, but they've got a really strong balance sheet to support them through any sort of downturn that we could go through over the next quarter or more. So that's another positive about the name. I gave a lot there with the fundamentals. There's a lot to talk about, but let's talk about what you see in the options. What kind of trade could we do with all of that in mind?
Well, yeah, and I'm just going to add one thing. I mean, the concept of paying in cash isn't the same as it used to be. The fact that there's probably one of the things that get touched the most out there is a dollar bill over time. So in the coronavirus,
Right.
just to go along with it, right?
Mm-hmm.
The concept of, oh my gosh, please pay with cash. I don't know if that exists anymore. People are running to services like Venmo and PayPal to not have that interchange of cash. All right.
Definitely.
So PayPal, we have it up $5.27. Just like the last time that we actually were talking about it, stock, I think it was Home Depot. As we were talking, the market was running overall, and the market is moving right now. So it did adjust my trade a little bit here, but I'm looking at a long call spread in PayPal today, and this is it inside the options playbook. We're going to try to avoid the earnings. We don't know what's going to happen with earnings, so that changes things a lot in the options marketplace. Because of that, I'm going to look at an expiration that happens before the earnings report. So this is a true short-term speculation trade. And once again, it's not meant to be a recommendation here on Stock Play of the Day. We're just trying to learn. And I look at different scenarios. Volatility has been a huge factor in the options world. I looked at a volatility chart before we started our call, and I see like one of the odd anomalies that is happening in the marketplace is PayPal's going to announce earnings. They're going to be announcing earnings on February 22nd. That's the anticipated date. And if they're announcing earnings on that date, we see that implied volatilities actually came in going into earnings. Just the other day, PayPal was trading at 100% implied volatility on a 30-day basis, on a weighted average. And now we see that same weighted average down around 60%. And if I look at even the volatility skew, I'll highlight the long call spread inside the option trading platform. But if I highlight the volatility skew, I'm going to try, there I am. We have the different expirations. So here's the expiration date that does not contain earnings, which is April 17th. Then we're going to go out and look at the expiration date on the 24th. Now remember, I just said that implied volatilities were up over 100% at one point in time. If we just look at the most at the money option, we're going to call that the 98 strike. Look at the call. This is the call inside the Ally Invest option chain. So I should highlight that. This is the call side. We see the implied volatility is at 48%. Now I always do this when there's an anticipated earnings date. I want to see if the marketplace believes that that data is correct. And we see now the implied volatility on the April 24th expiration at 54%. Now that is definitely enough to imply that that going into earnings, considering that the implied volatility was up over 100%. But we're still in a high volatile environment. And like I mentioned, with the VIX, it also implies with stocks like PayPal. The fact that we're finally coming off those ultra highs in implied volatility shows there's a little bit of normalcy, and I say that with air quotes, as far as volatility is concerned. So we're getting back to a little bit more normal times. But to make a long story short overall, I'm going to avoid that earnings date. So we're going to do a long call spread. We're going to look for a little pop in PayPal. We're going to be buying at just in the money option contract, which in this instance would be the 96 strike. I am then going to go out and sell the 103 strike. I can go all the way up to 103 because of where the volatilities are at and still get about $1, if you look at the midpoint on this option contract. So I can bring in a lot of premium, quite a bit higher overall on this trade. So we have a 7-point wide spread. And that trade right now is at, okay, it hasn't moved too much, is at $3.19 on the midpoint. Now, we can never guarantee a midpoint fill, and you always want to think about commissions, but $3.19 overall, let me look at my notes, that means that that's going to be our max risk, 321. I'm going to call it, let's call it 318, because that's what I wrote down when we were looking at doing the trade. So $3.18 would be the midpoint. That would be our max loss, just like if we bought options outright, but we're buying a long call spread here. So our max loss is $318 for every 1-by-1 spread that we do, for every one leg that we buy and every one leg that we sell inside the spread. So $318 minus commissions. And then on the upside, we have $3.82. The width of the spread, 7 points, minus that 318, that's going to give us our overall, that's going to give us our maximum upside on this trade. Okay, so that puts our break even at 99.82. If we ride this all the way to expiration, we hope that it at least gets to 99.82 overall. That's where we would break even on the trade. But we want this move to happen soon, before earnings, because we have 11 days away till that expiration date. So only 11-day trade. Now, with this being said, this is going to be our paper trade for the week. And like I said, we're always just trying to learn here on Stock Play of the Day. But here's the way that I would approach this. If you rode this into earnings, I don't really want to deal with the risk of earnings. I have no idea what's going to happen. Earnings season has just started. But if you ride this into earnings, this type of trade, let this one play out, and you want to get long PayPal, I could just see after earnings, if implied volatility even comes down more, just buying a deep in the money option contract, buying a long-term option, which is referred to as a leak, and going a little bit deeper in the money and making that your longer term play on PayPal to happen after earnings. Let the risk of earnings happen, do the shorter term trade, and then look at doing a longer term trade using long options in PayPal after the fact. All right. So today, I hope you've been adding your questions in the right rail, but we're not going to be able to answer them on this at-home edition of the Stock Play of the Day, but we are going to make note of them. So keep typing in your questions, and we will address them at the top of the show next week. But with that said, let's run back and take another peek at the market. S&P 500 index, Lindsay, just a little recap. It looks like we're up even a little bit more now.
Yeah, again, it's a big Monday in the markets today, which is welcoming. There were several weeks there that we're hitting limit down in the market. So you know, the mood in the market certainly is that of optimism as we start this week, and it's the start really of a new quarter. So, you know, we're feeling good. The market's feeling good about getting past the coronavirus situation, but we do, you know, we do like to, you know, make sure live in the world of realism, and really just kind of note to our viewers that, look, there is a massive impact that this is having on the economy, and said that in his annual letter to investors. So we don't yet know how long or deep this economic recession is going to be. We know we're in one, but you know, we are hopeful that we get to the other side of this and we can reboot the economy very quickly. And that's really what the market's pricing in today.
Right. And then with PayPal, as I mentioned, I mean, that concept of handing somebody a dollar bill anymore just isn't as exciting as it used to be. So in this instance, what do we see with PayPal a little bit? A little summary on there.
Yeah, I mean, I think PayPal, again, you got to look past, like the market is doing, look past the first and second quarter for sure. It's not going to be pretty as consumer spending has tapered off. That can support this company for the longer term. And this company has a very strong balance sheet to support it through the difficult times that we are currently in. So we like PayPal. You know, from here, you know, there is the downside in the near term from the economic impact, but the future looks bright.
Right. And we have earnings. It is getting into the middle of earnings season once again. So the fact that we have earnings, we looked at a shorter term trade, and we actually kind of gave a little bonus trade, paper trade on today's stock plan.
You did
Yeah,
short term and long term.
yeah. If you want to go long term, I think looking at long term in the money options is a great alternative. And I've been mentioning this over and over, the fear of missing out, the FOMO. You need to allocate some capital, and by limiting your risk by buying a little bit in the money options as a stock surrogate, as an alternative to buying the stock and having all the risk of owning the stock outright. It's a little bit, you just go out longer in time, get yourself past the summer, and that's an interesting alternative to just buying the stock outright. All right, that's going to be it for this at-home edition of the Stock Play of the Day. We're going to address your questions next week. Don't forget. So we'll see you same time, same place next week.
See you next week.